What's up, investors? Justin here. So NIO will be reporting their third quarter earnings today at 7 p.m. after the market closes. And even though it is very difficult to predict what will happen, I do think NIO has a good chance of going up on the news. So I first want to talk about why I am bullish on NIO's third quarter earnings report. And secondly, I also want to talk about the short seller report that came out last week, because I honestly think it is BS. And I have some very good reasons for thinking that, but I will get into that in the second part of the video. So make sure you watch all the way to the end so you don't miss out. But first, if you are new here, make sure you hit that red subscribe button. I put out videos every week on the stock market and investing, and I have been able to grow my investments from zero to well over $500,000 in just the past 10 years. So hit that subscribe button and let's get into the video. So overall, analysts are pretty bullish on NIO stock. Analysts predict NIO will report somewhere around $652 million in revenue and will have a loss per share of around 17 cents, which might not sound that great. But in Q3 of 2019, NIO only reported $262 million in revenue and had a loss per share of $2.38. So year over year, this is a big improvement for NIO stock. And if we compare the expected Q3 results to Q2 of 2020, we can see that revenue is expected to jump by roughly 24%, while the loss per share is expected to remain roughly the same. So to me, this is a good sign that NIO is continuing to grow, but is still moving towards being a profitable company. Also, what's really encouraging to me about NIO stock is that their monthly sales numbers keep going up. In 2020, NIO sales have jumped from a low of only 707 in February all the way up to 5,055 in October. Now, part of this is due to the fact that 2019 was a terrible year for car sales in China. And it was so bad that it was actually the first year that car sales dropped in China in over 30 years. So it is not surprising that NIO sales have improved this year. But instead of simply recovering and plateauing, NIO sales have continued to climb. And NIO just recently announced a record for the most number of deliveries in a single month for October of this year. So make no mistake, even though 2019 was a very tough year for NIO and it almost caused them to go bankrupt, it does look like 2021 will be a record-setting year. And I mentioned this in my previous video, but I do think it is possible to see NIO stock reach $100 or even $200 a share sometime in 2021. Which would be a 300 to 500% return based on the current stock price. Now, solid growth in the Chinese markets is definitely something that is helping NIO stock hit new highs. But something that a lot of people aren't talking about is NIO's plans to expand into the European markets. Being able to expand out of China will be crucial for NIO if they want their stock to go above $200 a share. Right now, NIO only sells EVs in China, but they have plans to begin selling their EVs in select European countries as early as next year. Something else that will be a huge growth catalyst for NIO stock is profitability. We saw Tesla stock skyrocket this year when they became a profitable company, and the same should happen to NIO stock when NIO can become profitable. Now, analysts do estimate that for NIO to become profitable, they need to double their current monthly sales, which should happen sometime in the next 1 to 2 years. But based on their current growth rate this year, it is looking like it will happen sooner rather than later. And like I said earlier, both of these growth catalysts have the potential to send NIO stock well above $200 a share. Now, another big reason that I think NIO can hit $200 a share in 2021 is because of their battery technology. NIO recently announced a battery pack with 100 kilowatt hours of capacity, which is equivalent of what Tesla is currently using in their most expensive EV, the Model S. And it is also a higher capacity battery than what Tesla is currently using in the Model 3 they sell in China, which is a big competitive advantage for NIO over Tesla. Also, NIO's new battery packs will allow their EVs to go 382 miles on a single charge, which is a big improvement over their 70 and 84 kilowatt hour battery packs that their current EVs are using. And in addition to this, NIO is also expected to reveal details about a 150 kilowatt hour battery pack on January 9th at their annual NIO Day. So in terms of battery technology, NIO is right up there with Tesla and is pushing the boundaries for EV ranges across the board. But one thing that NIO is doing that Tesla is not is allowing their customers to swap out their batteries. NIO has been investing heavily in swappable battery technology and has successfully completed over 500,000 battery swaps since 2014. Now, what's interesting is that Tesla appears to actually be moving in the opposite direction as NIO when it comes to swappable battery solutions. Musk announced at Tesla's Battery Day 2 months ago that Tesla's new batteries will actually be a part of the car's structure. What this means is that once the battery reaches the end of its life, it is likely that the entire car will have to be scrapped, which really doesn't sound like a good thing to me. But there are two big reasons that NIO's strategy might prove to be the better plan over the long run. For one, battery technology is changing very rapidly. So right now, EV owners are hesitant to buy an EV because they are afraid the ranges will go up shortly after they buy their car. Also, we are seeing a strange phenomenon right now where battery technology is improving so fast that the price of EVs is actually starting to come down, which makes people want to wait to buy an EV even more. So by allowing battery swapping, NIO is reassuring new customers that they can always upgrade to the latest and greatest batteries whenever they become available. And NIO is working closely with Chinese battery maker CATL to make their battery packs for them, which CATL is the same company that is currently making battery packs for Model 3s at Tesla's Shanghai factory. So the batteries in NIO's EVs should be very similar in terms of quality to Tesla's batteries. Now, not only are swappable batteries more convenient than needing to charge at a charging station, but they also would add a reoccurring revenue stream to NIO's business. Reoccurring revenue is highly sought after in the business world because it is usually more consistent and results in a company making more money over the long term. Also, NIO could drastically reduce the price of their EVs since they can spread out the cost of the batteries over many years or even decades. And this could help them one day be able to sell their EVs for much lower prices than even Tesla can. So next, I want to move on to the short seller report because the point I just made invalidates most of the report's arguments against NIO stock. Andrew Left, the short seller who wrote the report, essentially makes two arguments against NIO stock. The first is that competition from the Tesla Model Y will destroy NIO sales. And the second one is that NIO is simply too expensive. Now, in my opinion, both of his arguments are not very strong, and they are both silly reasons to sell NIO stock right now. And for me, I actually used his report to buy even more shares of NIO stock. But the biggest reason I am not selling NIO stock is because the report did not mention any problems with NIO as a company. By all accounts, NIO is executing extremely well and is continuing to gain market share in a very crowded and highly competitive market. Also, like I just mentioned, swappable batteries could mean that the price of their SUVs will be much lower than Tesla's prices for the Model Y. So I think it's kind of silly to say that the Model Y will automatically cannibalize sales of NIO's SUVs because we simply don't know what is going to happen with the swappable battery tech. And in my opinion, I think the swappable battery tech pokes a lot of holes into this short seller report. So in my opinion, I would not be surprised if Andrew Left released this report to make NIO stock crash just so he could then go and buy more shares. Also, the timing of when the report was released is very suspicious, and it makes me think that this was his plan all along. He released his report only 3 days before NIO's Q3 earnings, which again tells me that he is expecting NIO stock to actually go up after their Q3 earnings report, and that would mean he would make a lot of money. Now, I do need to clarify that I do not think all short sellers are scammers. When Hindenburg released their report on Nikola stock, their report was over 50 pages long, and it proved that Nikola was a very poorly run business that lied to investors. So in my opinion, this short seller report from Andrew Left is complete BS and should just be ignored. Also, this is not the first time that Andrew Left has made baseless claims against a company in order to try and make their share price fall. Back in 2017, despite having no concrete evidence, Left accused Shopify of being a fraud, and he warned investors to sell. But since he released that report in 2017, Shopify stock has gone up over 1,000%. So if you would have listened to Andrew Left in his Shopify report, you would have lost a lot of money. And I think that if you listen to his report now, you're going to lose a lot of money with NIO stock. Now, luckily, it looks like investors in NIO stock have chosen to ignore ignore this short seller report and have instead bought more shares. NIO stock is already rebounding back towards $50 a share. And based on all the growth catalysts expected to come in 2021, I think right now it might be the cheapest NIO stock will ever be. So in my opinion, I think it is not a bad idea to use this short seller attack as an opportunity to actually buy more shares of NIO stock. Now that being said, I do think it is very difficult to predict which way NIO stock will move on Wednesday after they release their earnings report. But long term, I believe that NIO will easily break $100 a share in 2021 and could even break $200 a share if everything goes perfectly. So even if there is a pullback after the earnings report is released, I don't think it will keep NIO stock down for too long. But let me know what your strategy for NIO stock is down in the comments below. Are you buying more, or are you going to wait and see what happens? Also, make sure to check out my channel where I have a bunch of other great videos about the stock market and investing. And with that, thank you for watching, and I will see you in the next one.